Hi there everybody, my name is Devansh and I am the lead tutor at FinTutors. Now if you don't already know, FinTutors is a CIMA registered tuition provider and has been winning the Global Pass Rate Excellence Award for the last 2 years in a row. So what we are trying to do over here is create a video that is a synopsis, that is a summary of the pre-scene released by CIMA for the May and August attempt. So this is not our entire full detailed pre-scene analysis. That's 2.5 hours long. That's a separate video. This is a synopsis video that we have created for you, a summary video that we have created for you, highlighting the important areas in the pre-scene and discussing them with the E1, P1 and F1 relevance. Because naturally, the first reason why we do the pre-scene analysis is to understand our company. The second reason why we do the pre-scene analysis is to relate the concepts in the pre-scene to our E1, P1 and F1 areas. And the third reason is try to pick up summaries or scenarios or hints that they have given us in the pre-scene which can turn into exam questions. And again, leave that job to us because we are the experts over here. We have been doing this for a long time now and we know the kind of questions that CIMA can come up with in the exam. So what we also do is we create a top 10 issues video. So my full pre-scene analysis, my top 10 issues video, they're part of our study courses which you can look at on our website, which is fintutors.com. But in that top 10 issues video, we highlight the top issues which we feel can be tested in this exam. Keeping those issues in mind, I have created a summary of the pre-scene to help you understand our company in a quick and easy way. So let's say you want to revise. Let's say you want to know a little bit more about your company in a quick way. You don't have the time to read the entire pre-scene today. For revision purposes, this synopsis document, this synopsis analysis which I have created will really help you, run you through the important parts of the pre-scene in under 60 minutes. So without further ado, let me begin with this summary and you'll see the value that it adds to your preparations. So before I also begin, let me tell you that what you're going to see on your screen are glimpses or cuts from my full pre-scene analysis, which is 2.5 hours long, where we go through part by part, word by word of the actual pre-scene that CIMA has released. And at every stage, we link it to E1, P1 and F1 syllabus areas. But this is a synopsis video, so I've covered the important areas and tried to summarize everything for you in 60 minutes. Now, naturally, in 60 minutes, we cannot cover every single part, every single, word, but we've tried to note it, note the important areas and combine it into one simple summary for you. So let's start with the first section, which is your role and the introduction section. So you are the finance officer working within the finance department of Kanann. Let us very clearly imagine what a finance officer has to do in the real world. Now it's very simple. In the real world, if you are a finance officer, you are asked to do things like costing help, variance help, working capital management help, projection of future cash flows, providing financial, analysis help. Now, if you look at all of these areas which I pointed out, they are very directly related to your E1, P1 and F1 syllabus. So what am I trying to tell you and what I tell all my students is, if you want to be a good finance officer, specifically for this exam, you need to have good E1, P1 and F1 knowledge. That's the place to start from. Without that knowledge, you cannot move ahead because you won't be able to answer majority of the questions in the exam. For example, they raise a variance question in the exam. But if you don't know what material price variance means, if you don't have that conceptual clarity, how will you relate it to Kanann and how will you present your answer? Because you don't have anything to start with. You don't have that knowledge in your mind. So to be a good finance officer, E1, P1 and F1 knowledge is vital, very, very important. So if you are not focusing on revision and only going through pre-scene and looking at past papers, it is absolutely not going to help. So Kanann is a company that designs, makes and sells saddles for horse riding, which means we are doing everything from the very inception to the very end of our product. So you are part of an organization that designs, manufactures and sells. So keep this in mind. And when you are doing your E1, P1 and F1 revision, you are manufacturing related topics, because now you're a manufacturing company. They've told you that. So you are manufacturing related topics like, for example, direct material variance, direct labor variance, like, for example, let's say total quality management, just in time. All of these become important because from the manufacturing company perspective, these are very relevant. And we'll be discussing them throughout this synopsis. Now, one important thing which we need to keep in mind and which they've told us in the pre-scene is that our company is one which focuses on quality. So our differentiating factor could be that we focus on quality and saddles only. We sell only saddles. We are not selling other horse riding equipment. So my differentiating factor could be that I'm only selling saddles. I'm only focusing on one product segment and I'm focusing on quality. But from my industry analysis or an extra analysis which I have made on this industry, we know that the accessories market in the horse riding equipment market. The horse riding equipment market is the entire market. Under it you have saddles and you have other equipment. Kanann is only making saddles. So the other equipment market is not being focused on, which is lucrative. So there very much can be a scenario in the exam where they tell you that we are now looking to, let's say, start manufacturing other horse riding equipment accessories. For this, we will need working capital, for example. So how do you think we can better manage our receivables? So the scenario I told you, receivables management you would have done when you did your F1 revision. Automatically, you can combine that and write a good answer. So writing a good answer in the exam has three major perspectives. First, revision. Second, pre-scene. Third, mock writing practice. If you choose to sign up with us, you do 25 questions of mock practice, which is like 70 topics which will be tested. No other tuition provider provides this level of comprehensive writing in an exam scenario in a timed manner, which is personally marked, checked and corrected by my marking team. All three pillars of the case study are important: revision, pre-scene, mock writing. You leave out any of this, you are compromising your chances of doing well on the exam. Next, Kanann only makes saddles. It does not make bridles. So like I told you, no other horse riding equipment accessory is made. We are known as saddle makers. So our differentiation could be that we focus on one segment, we focus on quality, but we are losing out revenue. Throughout the company's history, it has been owned and managed by the Kanann family. So now again, this is a family owned business, a family oriented business, passing down from father to son to, daughter, whatever. A family owned business is one which can be defined as a business in which two or more family members have majority ownership. So Kanann is well established as a family business. Keep in mind, if you are a family business, you have good common values. Everybody is working towards one goal because the same family is working together. There is also disadvantages that there may be lack of skills. Not every family member has the skill to run a business. There may be family conflicts, family problems, and you're not looking outside for better people to run the business. So the business at the end can suffer. So because they told us that we are a family business, I gave you some extra information as to put some ideas in your mind to relating to, okay, it's a family business, but there are couple advantages, couple disadvantages which you need to keep in mind, because this is a prominent factor as we move deeper into the pre-scene. Now these green boxes or yellow boxes deeper which you see are ones which we have put up. So these are our ideas, these are our questions, these are our relations to E1, P1 and F1 that we make throughout the pre-scene, giving you ideas and explaining every part to you. Now to company overview and layout. The company's current managing director is John Kanann. We know that it's a family owned business. John has a sister Anne, and they both hold together 80 and 20% of the company. So it's held, all the ownership is within the company itself. Anne is a successful author of romantic novels and has no interest in horses or equestrian pursuits. She is not involved in the management of Kanann. So I told you the disadvantages of a family owned business are pretty much prevalent over here, because somebody who has no interest in the business holds a voting right in the business. John's daughter Freya has participated in equestrian sports when she was a small child, or since she was a small child. She is now an international show jumper and represented Keeland at the recent World Equestrian Games. Freya's medal-winning performances in individual and team events at the World Games led to her inclusion in Keeland's Olympic team. So she's included in the Olympic team. She's actively participating in her horse riding activities and training and then performances. So again, think, how much time does she have to give to the business? Are these the factors which are holding the business back? Again, family owned business has its own advantages but disadvantages as well. Now John is immensely proud of his daughter's academic and sporting achievements and welcomes her involvement in the company, which he freely admits has an aging management profile and needs new ideas. So again, very clear over here that there is the need of new blood, because this company, as we go deeper, we will learn that it needs, that it is in a stagnant position. It needs to grow, it needs to move forward. So is the company not moving forward because of this aging management profile? It can be the case. So HR will be an important role at this stage, which is in your E1 syllabus, because the company is now looking to break free from its old managing profile, its old managing regimes. So new marketing techniques can be a scenario, new costing techniques can be a scenario. A small business overhaul is on the horizon because they have clearly given you hints in the pre-scene. The managing director himself is saying that the company has an aging management profile and it needs new ideas. So new people, new ideas, new innovations is going to be the way forward for this business. New marketing techniques in your E1 syllabus, new costing techniques, your P1 syllabus. Now production, which was previously very labor intensive, is now seeing a move to more automated production techniques in areas such as leather cutting. So earlier everything was labor based, now it's machine based. However, despite this, the production of a saddle still relies heavily on the skilled labor of the saddle makers in relation to stitching and assembly. So what we are trying to see over here is, while our managing director is committed to let's say business new ideas, it can also be very prevalent that the managing director will look at new production techniques, new costing techniques. So more automated techniques would mean better production, and with better production, costing needs to evolve as well, because if you can't cost accurately, you're not going to be able to set a good selling price. So from the traditional costing method, moving to activity based costing for a modern business could be seen as the next step. So ABC will be further detailed upon in the costing segment deeper on, but from now itself, putting it into your mind that if your P1 concepts of ABC, activity based costing, are not clear, then an exam scenario very likely on activity based costing you will not be able to answer. So these are very clear hints in the pre-scene which we got to pick up. So production is going through a mechanization, meaning machines are now being used in production. But design improvements are also being seen in the use of high-tech materials. Input, raw material is also becoming high-tech. For instance, using carbon fiber in tree manufacturing. The tree is the base of the saddle. To obtain a lighter and stronger tree, and the introduction of synthetic materials in the production of saddles is becoming more and more prevalent. So carbon fiber is being used, which is a high-tech material, which is input. So there has also been moves to introduce more automation in this process. So more automation means a move towards modern manufacturing techniques like JIT, TQM, lean manufacturing, quality circles. So is this something that our organization is going to look at because it wants to improve, because it wants to innovate? These new concepts give rise to discussions on quality management, quality related issues, quality costs. This is very clear indication of your E1 syllabus, modern manufacturing techniques, quality related costs, JIT, quality management. So please remember, overhaul is coming from the costing perspective, can come from the manufacturing perspective, and because this new material is being used, there will be huge buy-in costs for this material as well. So your material variances also come into the picture, which is your P1 syllabus. So costing, variances, modern manufacturing techniques, these three things we spoke about over here. Moving on to the directors and key managers of this business. Now they've already given us or mentioned to us that John is the major managing director of this company. He is the person who is making all the decisions because he owns 80% of the business. But I try to look deeper into the management tree given to us because it tells us more about the organization. I also want everybody to know what each person is doing in the company. Because firstly, if you don't know the management, you don't know the people who are running the company, how are you going to understand the company? Because their mindset is the company's mindset, right? Second, one added advantage is if you remember what each manager is good at. And then when you go to mock question writing, you use that manager's name, or in the final exam, you use that manager's name, you use that manager's competency. It adds business skill marks. It adds business skill integration to your answer. So it's very simple. Just remember what John does, what John is good at. What Reena does, what Reena is good at. What Jack does, what Jack is good at. So for example, when you are writing a question in the final exam, let's say on new marketing techniques, you can write that John is a trained saddler. He knows what goes into the making of saddles. So his insight into what to include in this marketing advertisement based on the quality of saddles will be an important input. And then you go on and write your answers. But just starting your answer in that way, with a manager's name, with a manager's competency, and then continuing whatever you have to write. Starting your answer, ending your answer, or anywhere in your answer, you use that. It tells the examiner that this person has studied the pre-scene. This person has gone through the pre-scene. This person has spent time on the pre-scene. So you get that added credit. You'll get that added advantage. And that's business skill. That's integration skill. So I suggest firstly, know the management. Secondly, use the names of the management on your answers to get your credit for it. So he is firstly speaking about John now, he's a trained saddler and a member of the guild. So he will know what saddles are all about, and his thoughts/knowledge can give shape to the products of our company. So if you're speaking about any new saddle innovation, any new saddles, any new manufacturing of saddles, his name is going to be very important because he has worked in this business for 36 years. So he knows how manufacturing of saddles and the setup works. So John is at the top. Everything related to saddles is his expertise. Next, we have Reena. Reena is deputy to John. So Reena is looking at 3 very important functions: sales, finance, and HR. As the business is going to go through an overhaul, finance is going to change, HR is going to change. So as the business grows, you may need to look at delegating these responsibilities and expanding the board further. Because as the business grows, we know the importance of finance, we know the importance of HR. But you can use a name for consultation when writing on any sales, distribution, finance, HR related topics. Third, we have Jack Newman. So we have John at the top, a deputy to John, and then under them we have different managers looking at different functions. So Jack looking at production, Ella looking at sales, and Lois looking at finance and HR. So Reena is the top deputy manager. Everything goes into her and then it goes to John. So when John is not around, Reena makes the decisions, but they are pretty much at the top, and then all the other functional managers report to them. So very clearly, if you look at this structure, it's a functional structure. Each function is a separate department. Jack looking at production, Ella looking at sales, Lois looking at finance and HR. They report to the people at the top who make the decision. So it's a very functional structure that is in place. The different structures like functional structure, divisional structure, matrix structure, the advantages, disadvantages of each should be something that you are clear about, and this is in your E1 syllabus. So coming back, Jack, he is well experienced to carry out his job because he has worked his way up in this business. So he knows the technicalities. His encyclopedic knowledge in the process of production would mean he can be consulted on cost-cutting assignments or production, assembly-related decisions. When you are speaking about production, assembly, cost-cutting, you can use Jack's name because that's his core competency. That is something that he is good at. Next, you have Ella, who looks at sales. So she is responsible for sales and marketing. Anything related to marketing, like new, modern marketing techniques, innovation in marketing, you can use her name. Last but not the least, we have Lois, who looks at finance and HR. HR is very important from your E1 syllabus. There is a full section on HR. So it's becoming more important because very clearly our organization is going to need an HR overall as well. Because we don't have people who are interested in the company or who have time to run the business in the company. The owners don't have that time or interest. So, except for John, obviously, the other two, John's daughter and John's sister, don't have the time or interest to give time to the business, and that is why the HR function will have to recruit new, good, innovative people to take the business forward. So you see, through this synopsis, we painted a picture of this company in front of you from the introduction perspective, from the major areas that need to be looked at for this business, and then we looked at the directors. Now there is an article in the pre-scene which is very prominent to some syllabus areas or some scenarios which I feel can come up in the exam, and that is why I want to discuss it. So there is an article where there is a there is questions that is being asked by the interviewer to Freya and to and giving direction for the company. Freya gives some very important answers, because after John, assuming John's ownership at some point is going to go to Freya, so Freya is going to become the major influencer in this organization because it's a family business. So over here, John is the interviewer, the name Jon, John is the interviewer, and Freya is the person who is answering the questions. So Freya says, I've taken some shots from that interview which I feel are important, and we are going to discuss them. This interview is mainly about the interviewer asking Freya as to what she feels this business needs, what she feels this business is going to do going forward, and it's mainly about her being part of the Olympic team. So in time, many of the people I know at higher levels of sport have heard of Kanann saddles, but very few have them because they tend to use saddles from brands that they are already familiar with. So in time, Freya would like to push Kanann forward to become the #1 choice for general purpose and discipline specific saddles. Very, very clear idea, let's say, being given over here, because it's clearly saying that as of now, we know Kanann as a business only makes general purpose saddles used for trail rides, hacking, etc. But a discipline specific saddle is one which can be used by experts in show jumping, dressage, or other horse active or horse championships, or competing sports. So over here Freya is saying that in time she would like to make Kanann #1 choice for general purpose as well as discipline specific. So expansion in product range is being looked at, because currently we only make general purpose saddles. We are not making discipline specific saddles. So important to note that there is a clear indication that we could need to invest in new machinery in the coming years. So your F1 topics related to IAS 16, property, plant and equipment, the revaluation of assets or the impairment of assets, disposal of assets, non-current assets held for sale, or even leases for that matter, becomes very, very important. For example, they can say that we don't have enough funds to right now buy a piece of machinery. We're going to lease it. How do you think the IFRS 16 leases would be categorized, and how do you think a lease would be recognized in our financial statements? You will need to know the details from F1. Otherwise, how are you going to answer this question? Now, rest assured, I am raising the topics for you. When we go to mock question writing, you will be writing mocks on these topics with us. So we will cement your knowledge on them. But right now, just pointing out that, okay, there is a clear direction that this can come up. So they can tell you that, okay, we've bought a new asset. How will you recognize it? So IAS 16, property, plant and equipment. We are selling this asset to fund the purchase of another asset. So disposal of asset, non-current asset held for sale. All of this is easily testable. That is why I'm pointing it out, and it often comes up in the exam. Then John says, plenty to keep you busy with over the next few years. Good luck with all of that and the next championships. I shall be following you with great interest. Which means because of Freya being in the spotlight, it's bringing light to the business as well. So because of all of these discussions of the business growing, of Freya being in the spotlight, I am thinking of the opportunity of, okay, Freya wants to grow, but fast growth will lead to capacity management issues. Capacity management in your P1 syllabus. This can also relate to costing related issues, because right now we have a very medieval or a very simple standard costing system. Third, it could lead to different variances, because if you are going into a new product segment, then naturally you won't have the knowledge of buying material for that specific new process. So your labor variances, material variances coming to the picture. And all of this can give rise to working capital issues. So working capital, your receivables management, payables management and working capital cycle from your F1 syllabus becomes very important. And like I told you, can there be a strategic change? Up until now, we were buying assets. Can we lease assets? So, if the business does not have money to pay together, leasing can be a very good option. So IFRS 16, which is an exam favorite topic, comes into the picture over here. So I just took shots from the article which is there in the pre-scene. I'm not reading it entirely because again I have to fit everything in 60 minutes. I'm only looking at the major areas. But you can see through this synopsis itself, we are giving you so many important aspects just to keep in mind and important areas which you can start relating to as soon as you go through this analysis with me. So just imagine a deeper word by word analysis that we do with you will be so much more valuable if the synopsis is giving you so many good ideas. Now let's discuss some other information on company operations. So there is a lot of, obviously any big company or any company, medium sized or small, has a lot of operations that we need to discuss. Again, this is a summary, so I'm looking at important aspects. So the total production and packing time for one saddle, they say, is approximately 28 direct labor hours, depending on the model that is being produced. So Kanann makes different models. Each model has different offerings, different quality types. And they're telling us that approximately 28 direct labor hours are needed. Now what I am understanding over here is 28 direct labor hours, which clearly means that the limiting factor over here, if I want to increase my production, labor is going to be a limiting factor because unlimited labor is not available, right? So when analyzing limiting factors, labor is one limiting factor. But there will surely be other limiting factors as well, like let's say throughput, like let's say time, like let's say the money that we have. So there can be different limiting factors. One clearly pointed out is the labor. So if we have more than one factor, we would generally use LPP method, the linear programming problem method, to understand which product to manufacture first in times of there being a limiting factor, because you obviously want to make the product which is more profitable for your business. You obviously want to make the product which is going to give your business the greatest return first. So LPP from your P1 syllabus again is an exam favorite topic, and we have couple mock questions ready on it to test you on it and to tell you how to tackle LPP related questions, but you got to revise it. Now, since we are speaking about the importance of labor hours for our business, understanding and evaluating different labor variances will be very important. So your P1 syllabus on variances, on labor variances, idle time variances, very important. In production, they are telling us that in the production of saddles, there are 4 main stages: cutting, then assembly, then finishing, and then packing. Very straightforward, 4 stages are present. That's what they're telling us. Kanann has good relationships with its suppliers because obviously we will receive raw materials and then we'll start cutting it, assembling it, finishing it, and then packing it. So many of the suppliers have been with Kanann for over a decade. In fact, some suppliers have been with the company since its inception, which means there is a strong supplier relation that exists, which again means that there is a great chance to explore JIT just in time, as this would further strengthen our working capital position and cash position as well, because JIT means there is no inventory. As soon as something comes in from your supplier, it goes into production. So JIT is a modern manufacturing technique which can help us have more cash not invested in waste areas so that we can use it in, let's say, growth, let's say, machine buying or whatever. So where possible, Kanann chooses suppliers with a commitment to follow sustainable production process. So remember that Kanann is a business which is in its culture has sustainability credentials or is following sustainability. So this is one of the cultures, one of the key points of differentiating of your business, something that you should keep in mind, because not all businesses are committed to sustainability and it's becoming more and more prevalent now. Credit terms from suppliers range between 30 days and 75 days. So events after reporting date and their accounting can be tested over here. Also F1 syllabus. Some suppliers offer prompt payment discounts. Although Kanann does not always take advantage of these. Bulk discounts are also available. Kanann does take advantage of these where possible. So the pros and cons of storing in inventory need to be kept in mind. You store a lot in inventory means a lot of cash is situated in one place. So means you are losing out the opportunity to use that cash somewhere else. This is your working capital cycle. The pros and cons of working capital. Again, F1 syllabus. So through these other operations that I spoke about, I gave you a picture of the 4 processes which Kanann follows, and under each process I gave you some opportunities which I know are very much tested in the exam. Now do finance. They've given us some important finance information. The company operates a standard absorption costing system based on direct labor hours with a single fixed absorption rate. Now for a company like ours, which is progressive in its thinking with our sustainability credentials and produces different kinds of products in different variants, a robust costing system is important. So a standard and traditional absorption costing systems has its flaws, and this is where your P1 syllabus comes into play. We already know that in a modern business or a business looking to innovate, standard costing is not really going to help, because direct labor hours aren't the only reason why costs are generated. There is much more reasons why costs are generated. Okay, till now standard costing was good, but from John as well, the managing director, agrees that the business needs innovation. So if the manufacturing technique of the business changes, then naturally the costing system should also change. So a move to activity-based costing can be an exact exam scenario which we are sure that in one of the variants in the exam, it's going to come up. There are 3 different variants in the exam. One of the variants can surely have a question based around activity-based costing. So the concept of activity-based costing, which we have explained paragraph by paragraph in our study notes, is important in an image form to keep in your mind so that you can apply it to the case study when the time comes. Also, remember the advantages, disadvantages of standard costing, advantages, disadvantages of marginal costing, advantages, disadvantages of ABC, because they can ask you, okay, from absorption costing, we're moving to marginal costing. Do you think it's a good idea? Marginal costing to activity-based costing. Do you think it's a good idea? So all 3 costing systems should be very clear in your mind. And please remember, this is a case study exam. There are not going to be any sums, but conceptual clarity will be very, very important. The standard cost of a saddle is updated for known changes in raw material, labor rates, and overheads each year. The use of a standard cost card is mentioned here and is only changed once a year. You can start to see the drawbacks of absorption costing. There will surely be variances because input or raw material will be, the price of that raw material will vary throughout the year. So you will keep having variances. If you keep having variances, how do you judge properly the performance of the organization? Because you will need to keep reviewing these cost cards, because your standard material price will differ from actual. Your standard labor price will differ from actual. In the business, record keeping is not sophisticated. They have told you clearly. For example, webbing, when issued for production, is simply allocated to production as opposed to the specific saddles being made. So it's not product centric, it's activity centric. So over here, it's simply webbing, everything under webbing goes over here. It's not divided into, let's say, setup, or let's say inspection, or let's say cutting. Nothing like that. So it's not very sophisticated. Webbing is therefore included in variable overhead in the costing system. So the overheads, there is no bifurcation of the overheads. This is again a drawback of the absorption costing system. There is no breakdown of the fixed overheads. There is no breakdown of the variable overhead. Just one heading, overheads. Everything involved under it. So how do you understand where to improve, where not to improve, what to look at? Now all of those who have done their P1 revision will start to make sense of what I'm saying. That is why I say the first place to start with is revision. For those who have not done the revision, this will feel a little alien because you won't know what absorption costing is. So from the finance perspective, there is a lot to improve for this company. Now we are doing a financial summary. Again, this is a summary. I am going to go through with you the statement of profit or loss and show you my analysis for it. Naturally, I cannot break down every single statement for you because of the 60-minute synopsis that we have created, but this will give you a very good sneak peek into what our full financial analysis is like. We analyze every single table, every single profit or loss, statement of financial position, cash flow statement, budget statements. We'll analyze everything one by one in our full analysis. Over here, I'm doing a summary for you. So let's start. If you look at the profit or loss statement, let's compare the absolute numbers first on the left hand side. You will see that revenue has marginally gone up. What we have done is, along with these absolute numbers, we have created percentages for you. Because it's very difficult to remember revenue went up from 5690 to 5860. It's very difficult to remember that, right? So that is why we have created percentages for you, so you can make sense of it, you can understand it, you can remember it and use it in mock questions. See, the first reason why we do the financial analysis again is to understand the financial health of my company. The second reason is we can make use of these percentages, of these numbers when we go to mock question writing. For example, you can start your answer or end your answer by saying that our revenue has gone up by 3%, which is not a very big increase. So we have to make sure that we look at new avenues, new opportunities, new innovations, so that the business succeeds. Something like this, if you were to write in your answer or incorporate in your answer, then it will add a whole lot of value, because the examiner knows that this student has studied the financials. This student has spent time on the financials. So it will add great value to your preparation. So yes, revenue went up by 3% close to. Cost of sales also went up by 5% close to. So if you see, revenue went up, but more than that, the costs went up. So naturally, there is going to be a decrease in gross profit. From 1991, it came to 1982. So gross profit went down, a decrease in gross profit, even though revenue increased, which means we were not able to control our costs. The same thing is seen in selling and distribution costs, admin costs, both have increased, which clearly means that we have not been able to control our costs even though the revenue has gone high. So further evidence that a new costing system could be implemented or should be implemented to understand our costs in a better way. And this led to a very steep decrease, close to 7-8% decrease in our operating profit, which is not a very healthy sign for a business. And because of this, profit before tax has also gone down. Income tax has also gone down because, the more you earn, the more tax you pay. In this year, our costs were higher than what we earned, so we paid less tax. And the profit for the year also will be as a decrease because revenue has gone up, but costs have also increased. So we have not been able to control them well. This is something that you will need to keep in mind from the statement of profit or loss analysis. That, okay, this is my company's situation right now. And you're only able to understand this because I'm giving you this percentage analysis, because I'm giving you this side-by-side, relevance, side-by-side explanation, which is what our whole pre-scene and this summary synopsis is about. So like I said, in my full analysis, the statement of profit or loss, the statement of financial position, the statement of cash flow, everything is explained. Over here, after profit or loss, after looking at the main position of the company, we will go to budget information that they have given us. So we also do a budget breakdown. We also do a budget explanation for every single budget statement given in the pre-scene. But I'm showing you again a brief of the same. So total budgeted gross profit has been given to us, where we have three main types of products, which is the Astral, the Meteor, and the Comet. In that, under Astral, we have two types, Meteor two types, Comet one type only. So if you look at this table that they've given us, the gross profit margin is highest in the Comet. It's 41% in the Comet, then Meteor type 3, Meteor type 2, and so on. It's in ascending order from left to right. But if you look at revenue contribution, Astral gives you 45% of the total revenue. The total revenue is 6013. So if you look at the Astral product, it gives you 45% of your total revenue, which means the least profitable product at 26 and 30% margin are the ones which you are selling the most. Okay, next Meteor, and last Comet, which means the most profitable product, which is Comet type 3 with 41% margin, is being sold least in terms of their revenue that it's generating. So naturally, after this budget analysis, it's very clear that Astral is the most popular, then Meteor, then Comet. Because the price of Comet is high, it's the most premium product that we sell. Plus, now we know that I should try to focus my marketing activities on Comet, or I should try to make sure that more and more people are purchasing the Comet product, because the Comet product is one which is most profitable for me. Again, you only understand this because of this minute analysis that we make, because we have brought it to your notice now. So if in the exam there is a scenario and they say that we are now looking to discontinue the Comet and continuously focus on Astral, straight away there will be a light bulb in your mind. Why? Comet is the most profitable product for my company. Should we be doing that? It brings big question marks. But again, that deep pre-scene analysis is important. So my deep pre-scene analysis will give you great ideas like this, because it's 2.5 to 3 hours long, part by part, everything is picked up. But in this synopsis also, you can see in this 60-minute synopsis, you have understood so much about the company. For example, you did the intro, you know the company operations, you know the managing directors of the company, you know the people who are running the business, you know the production process, some insights, you know the statement of profit or loss. You have now done this budget analysis where you know we have three kinds of products and the profitability of each product. So you are getting that deep insight just in the synopsis. So imagine what comes when you go through a very detailed pre-scene analysis with us. Now coming to cost of sales. So this is the budgeted cost of sales we have focused on. So this budgeted cost of sales, they have given you part by part budget of or part by part costs under Astral, under Meteor, under Comet. Let's analyze it. We'll look at Astral and we'll look at Comet just for comparison purposes. So for the Astral range, let's look at type 1. You sell 475 units. Out of when you sell 475 units, $460 goes for raw materials, $680 goes for labor, $267 for variable production overhead, and $624 for fixed production overheads. So it's very clear that majority of our cost is committed, like 50% of the cost is committed in direct consumption, like direct labor, direct raw material. But it also means that the other 50%, which is your close to 50%, which is your production overheads, variable and fixed, are also a big part, which clearly tells me that I have not been able to control my costs, which we learned before in my profit or loss statement. Could this be because all production overheads are grouped under one subheading, variable production overheads, everything in there? But which production overhead are we speaking about? Which indirect costs are we speaking about? For example, electricity bills, water bills, which product is taking how much resource? We don't know that. So how can we cost correctly? How can we understand the costs of our business correctly? It's not going to be possible to break down or understand our costs, right? Because of this standard absorption costing system that we are following. So Astral, if you look at it, out of the 2031, which is the total cost of the product, you will see majority is committed in, for any product rather, let's pick any product, Meteor or Comet, majority of the costs is raw material, direct labor. But there is also a significant proportion of the variable overheads which we need to keep in mind. So what we have done for you over here is, the total cost of sales for the Astral product line is 1929000, very clearly given to you. The production cost per unit varies by type. For type 1, it's 2031 to make. For type 2, it's 2269. Then we've given you a breakdown of raw materials. So for raw materials, the total will be this much. Type 1 total will be 218500. Type 2 total will be 272000. What are we doing? Simply multiplying the cost by the number of units sold. Not doing anything else. So this is just an analysis that we have made telling you that, okay, raw material, this is the cost. Direct labor, this is the cost. Variable overheads, this is the cost. 267, 277 without the breakdown. Next, fixed production overheads like your rents, your salaries to management staff. All of this is fixed, but it's still overheads, which you don't know very clearly about because everything is grouped into one subheading. So very clearly, what we understand is the cost system for my business can go through an overhaul because there is a big percentage of or rather a significant percentage of costs which are variable and fixed overheads which need to be broken down to understand our system in a better way. Same way, the direct labor, they've said that more mechanization can be brought in this process. So if more and more machines are added, your variable production overheads will be more and more and more. So to understand this in a better way, a new costing system is on the horizon. In my deeper analysis, we have done the same for the Astral range, for the Meteor range, for the Comet range, one by one by one. But again, this is a synopsis, so I'm helping you understand what this table is all about. what this budgeted cost of sales that they have given is all about. So like I said, through this quick analysis, you have learned so much about the company in less than 60 minutes, which means if you do a detailed analysis with us, your knowledge is going to be far, far superior. You don't need to read anything else, and you do my analysis twice. You'll remember all the important things which are needed to know about this pre-scene, and you'll organically remember it because we explain it with diagrams, we explain it with E1, P1, F1 relation throughout. So it adds a lot of value for you. Now what I would like to say is you can get access to a whole lot of free material that we have on our free mini course. So this mini course is something that we have created to give you access to more material for free. It includes blueprint explanations, which are one of a kind, the I can statements, which are one of a kind. You will not find them anywhere yet. Only and only FinTutors do it till now. Second, there is a video to help you create your personalized study plan. There is a tip on mock question writing as well, how you should approach questions in the exam, how to write questions that score high marks in the exam. That's video 4. You also have a video on the industry analysis and extra analysis that we have created. And on top of that, you have a free mini mock exam, which is very much related to Kanann. It's exactly like the exam. All of this is part of our free mini course. Just go onto our homepage. It says fintutors.com. Go onto any web browser, type out fintutors.com, go to the homepage. On the homepage itself, this is what our homepage looks like. You'll see there is pre-register to get access for the May course. Just write your name and email. You'll get access to it right away, and you can start studying and accessing our very, very informative material, because at the end of the day, we are Global Excellence Pass Rate Award holders. So whatever we create is well founded. We are working with CIMA offices all over the world, and all of our students who are even working professionals, who have even come through the FLP route, who have come through any route, do find our material helpful, because that's how it's created. So I look forward to seeing you on our mini course. It's a very important and free course. So there's nothing that you are, actually going to, it's going to add value. It's going to help you. So try it out. You will definitely find it helpful. And if you found this video helpful, do let us know. You can email us as well on help@fintutors.com. Somebody from the team will get back to you on any questions that you may have. Thank you. I hope you have found this video helpful. Thank you, everyone.